Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media like we normally do. It's generally related to three different topics: wealth building, commodities, and or financial topics. Obviously, I'll share my opinions as we go through it together. So let's dive in. Let's take a look, see what's going on with Twitter. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com. I just went over portfolio allocation, position sizing, risk reward, my opinions around it. It may differ from a lot of other people, my opinions around that. So that is uploaded to the website. Everyone can view it. I upload all of our weekend meetings and midweek updates. They're all on the website. We have a coupon special Black Friday that is still active if you'd like to join. 50% off the first month and a larger discount on the yearly membership if you'd like to join. So Governor Drill, it says, paying my property taxes this morning and I'm bitter again. I'm practically renting my paid off home from the county, and if I don't pay my taxes, they evict me and take everything. Yeah, that is something I do not like either. But I looked at his tax bill that he's sharing here, 15,311. That's pretty rough. My property taxes in Colorado are just over $3,000 a year. And I chose this state specifically because of property taxes and the combination of other taxes that this state has. I think the cheapest state is probably Nevada or Wyoming. They have no state income tax, they have cheap property taxes, and the home prices, they're not cheap, but I would say they're not super expensive. They're kind of in the middle, slightly above middle, medium price area, depending on where you live. But that's also from me coming from a state that has, I'll say, a higher home price than a lot of other states in the South, or even in the East, Southeast areas. Logan says so this is the response here. So for years we've heard and read arguments that the U.S. was Japan too, and would need to manage decades-long deflationary spiral. What were the main reasons this analogy was not right? And Logan has nailed this perfectly. He says, we do not have the same demographics as Japan. It's that simple. Demographics is what drives deflation or inflation. Well, deflation is driven by a drop off of demographics and I'll say aggressive loaning practices, the combination. So when you look at Japan's population as it goes through time, here's 2025, you can see they're very top heavy with not a lot of young people coming into home buying years. That's what causes deflation or disinflation in your system. If you look at China's population, this is like the dream of all dreams for a real estate investor when it's real thin up top and fat at the bottom. As that fat movement goes through, here's 2014 when these guys come into home buying years, you're going to get a boom, a bust, and then another boom. And then in 2025, the big bulge that's coming through is going to cause a bust after. And that's exactly where they're at. They're causing a bust. And then if you look out into 2050, they have a smaller demographic behind it than the big bulge. So they might be kind of in a bad situation from a real estate perspective for a while. The US population doesn't look anything like these, where we get a funnel coming back down. We kind of stay fat. 2025, we have a lot of home buyers coming into home buying right now. That's what this bulge is coming out. And that's going to put inflationary pressures in the market. It's going to create credit. They're going to spend more money. They're going to buy homes. They're going to buy furniture, cars, have kids, buy diapers, buy more food, on and on and on and on. And in 2050, this is what it's projected to look like, where the demographics don't fall off a cliff like some of these wide movements where they just fall off a cliff. That's you do not want that. Gold Silver HQ says silver is the most undervalued asset on Earth, and its supply is vanishing before the world even notices. It's crazy. Well, yeah, it is, and that's why I think governments and Federal Reserves don't want people buying gold and silver because there's so much intrinsic value in it. What I would do is I would create some digits, some random digits on to create crypto, and then force people into intangible assets because no amount of money created or all the amount of money that is created could be absorbed by an intangible asset, but not by tangible things like gold and silver. That will force the price through the roof. But if the price of crypto goes up, no one really cares because it's intangible. You can absorb whatever it is. It's digits absorbing paper dollars or digital dollars for that matter. Casper has on here or Uselink URA. So Uranium Miners ETF URA is close to breakout from its 200 weekly momentum. So this is the momentum on the bottom here in the blue. And you can see where we've got a downtrend line that we're trying to break out of. And then we've been trading sideways here with the URA ETF price-wise. So generally when momentum breaks, that's when you'll see a big break in the price. So hopefully we get a break here and all the uranium guys will be very excited and happy about that. Patrick says, that is it, guys. The final stretch of the year. Silver might not get its historical breakout confirmation this year, but still has a bullish backdrop. You see, if gold versus inflation closes the year where it is now, that is a historical breakout confirmed. Silver tracks this. The only thing that I kind of like don't know if it's 100% legit. I mean, we make up a quarterly close is made up by human beings. We made up yearly, closes and stuff. Um, and yeah, it's a way to say, yep, it tracks and is a confirmed breakout. But that's the only thing. I look at things. It's like, yep, it's got good pattern. Yep, if it doesn't break this year, it'll break next year. But again, what people say, or what I always say, is you gotta close strong. So silver obviously has performance issues. So we need to get some Viagra for silver here so it can really break out of its pattern here, that cup and handle. So that's what we need for silver. Somebody get it some strong performing pills to break out of this pattern here. So coming on down, we've got Miner Deck weekly insider buying highlights. We've got insiders buying 30 million. That's quite a bit of money there for American Eagle Gold. We've got Aftermath Silver 10 million. And then after that, it's pretty much chump change compared to those first two there. Kevin Carpenter says, Warren Buffett, if I had one piece of advice to give to young people, it would be just don't get in debt. It's very tempting to spend more than you earn. It's very understandable, but it's not a good idea. So, in his opinion, skip the debt, boys. 2025, the last year of meaningful non-OPEC plus supply growth ever again? Question mark. So this is forecasted non-OPEC plus oil production growth. What you want to focus on is go forward demand growth rate. That's where we need to be at 1%. Boom, 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 boom. You can see that we've got greater growth, less growth, greater growth, less growth, greater growth, less, and then we've got greater projected in 2025. There's some projects coming online in 2025 in non-OPEC where we could produce a little bit more oil next year. But what happens after that? Well, as long as you're below this dotted line at 1% there, or 1 million barrels per day forecasted, I should say, you're going to run deficits, and that's going to have to come from OPEC. But what happens if you run into a decline? OPEC's not going to be able, perhaps, to make up this difference. And remember, this is the growth rate. It's not absolute. So the growth rate keeps going up, and you're missing these barrels. You're missing 750,000, 1 million barrels, 1.25 million barrels, 1.5 million barrels. And they're going to be OPEC's going to be overrun when we get out into this area over here. The question then becomes, if non-OPEC cannot grow oil production supply and OPEC can't grow oil production supply, well, then what happens? I don't know. That is a scary thing. But that's also why I'm positioning with this in front of us or this coming out in the future. And remember, what it is, it's the dotted line and the difference between where this is and the dotted line. And that's what OPEC needs to come up. So OPEC needs to produce more, and then they're going to be tapped out. So within the next few years, we're going to see what this world has in pumping capacity. It's coming. So talking about Eric Nuttall, let's talk about his opinions here. So why are we long-term oil bulls? We believe that demand will grow longer and stronger than the consensus. But what of supply? Energy Aspects forecasts that non-OPEC production will peak in 2028. In US, it's going to peak in 2027. And importantly, that after 2025, non-OPEC growth will be less than demand growth. That's next year. So after next year, non-OPEC growth will be less than demand growth. And what that equals is a growing call on OPEC beyond next year. Typical oil bull markets begin this way. What we may be in the what may be the final oil bull market in history should last at least until peak demand is reached in mid-2030s or longer. In this 2026 plus supply versus demand environment, with OPEC holding all of the cards, it is not unreasonable to believe that the oil price can move materially higher. For now, it's known that 2025 will require the ongoing leadership of HRH and OPEC at large. Yet we believe significantly higher prices are not that far away. And this is forecasted non-OPEC oil production looking forward. You can see we come on up and then we basically flatline and potentially head lower out in 29 and 2030. This is a huge deal, guys, because most everything doesn't matter outside of oil production. Like it just doesn't matter that much. Oil is everything. And we've come to this gigantic industrial advanced societies through oil. If this is in fact a peak and OPEC doesn't really have a ton of spare capacity, it's going to be real interesting to see what happens after 2026. It's going to be one heck of a ride. And some people, what they'll say is there'll be an oil spike in terms of prices, and then we'll get a recession collapse. And then we just go back and forth between oil spikes and recessions back and forth. And that's what some people have speculated in history. Maybe somewhere in the world there's another shale revolution. I don't know. I don't know if that's going to be the case, but you know what? We're going to go through it no matter what I think or what matter. It doesn't matter what anybody thinks. We're going to go right into it, and we'll see if we've got production out there to increase it enough for the demand. Harris says if they're consistently warning you about the next crisis, it's usually because their own lives are in crisis, and that's not your problem, says JC Parrott. So there's a lot of people warning you about the next crisis that's coming. Maybe it's their own lives that are in a crisis. Impossible without silver. So green demand and green candles are on the way for silver. So silver demand, the additions just ramping up dramatically. It says solar power will be the vast majority of power generation, as Elon Musk. Well, we're going to test how much we can produce of silver if that's the case. So let's try it. Let's see what happens. Now, Richard Bernstein Advisor says ISM new orders, which is a leading indicator, moves above 50, which looks more like a recovery than a recession. So what's going on here now? We've got a lot of people calling for recessions and pullbacks, but the ISM new orders is actually above 50. When you're above 50, you're expanding. When you're below 50, you're contracting. So I know there's some people who talk about a potential recession that's coming. I said this here is your recession. The pullback from 2020, 2022 into 2023, this pullback here, this is the recession. Are we coming out of the recession? Is the bigger question. Maybe. And what's really weird is I think we are getting a slowdown here, and inflation's been covering it all up. So GDP is a function of inflation and some other things. If they understate inflation, then you can overstate GDP. So I think they were playing with the numbers here. That's my guess. Lance Lambert. So Wells Fargo's forecast model expects U.S. home prices as measured by Case-Shiller to rise 5% in 2025 and another 5% in 2026. It's because of the demographic. The affordability is going to impact the volume of sales, but the demographic is there. It just doesn't disappear. The demand is there so long that interest rates and the mortgage rates fall. So right now, some of that demand is being priced out, but you've got a base below you. So prices can't fall necessarily too much if you've got this gigantic base underneath of buyers. The housing market is still out of balance. You've got too many buyers for not enough supply. But affordability has an impact, and it's impacting just how much is exchanging hands. Black Friday drove a record 10.8 billion in US online sales. It is up 10.2% year over year, according to Adobe. Prediction for housing prices in 2025 alphabetically. So Apollo says 11%. Okay, that's pretty aggressive. Bank of America is around 4.7, CoreLogic 2.3, Fannie Mae 3.6, Goldman Sachs 4.4. We've got Moody's projecting a downward move of minus 0.4%. And then everyone else is around 2-3% over here. So that's their projections. And then Lance, this is from Housing Wire. Their forecast is home prices to rise 3.5% next year. That's Logan's projection. Investment wisdom. For some reason, people take their cues from price action rather than from values. Price is what you pay. Value is what you get. Markets are there to be taken advantage of rather than instruct you as to what is going on, says Warren Buffett. And that is in stark contrast of what a lot of technical analysis guys are. I'm a hybrid. I want to see technicals look good and I want to see the values there. If that resonates with you, sign up to the website, learn what my approach is. If you're an only technical analysis person, you don't know what you're buying that's basically underneath the covers. You don't know what the value is. You're just looking at price and then looking at how humans are interacting with each other and that price. It's good to use, but I think it's a much stronger case when you combine fundamentals and technicals together. I think it clears it clears the picture of what companies you want to be in versus the companies you don't want to be in. AKA, a really strong fundamental company with good technicals is a great setup. A company that's got a setup but has crappy fundamentals, I wouldn't invest in it, irrespective of the technicals. Invest in assets, so the investing cycle. It says, I feel great about my portfolio. That's the point of maximum risk. That's exuberance. Temporary setback. I'm a long-term investor. That's denial, fear. It pulls all the way back. Maybe the markets just aren't for me. That's panic and capitulation. And this is the point of maximum opportunity. That's where you want to invest, is down here. You want to avoid up here technology, AI, in my opinion, and you want to buy what's down. And then you have to be patient for all this to go back through the cycle. So we're in a lot of areas right now of commodities that have gone through capitulation, that have gone through depression, and a lot of them are over here. Apathy and indifference. It's kind of where we're at. And that's that disbelief phase. They don't believe that we have entered a new bull market and we're getting some pullbacks, which could be a bear trap for some of these, and people just don't believe it. That's the disbelief phase. More LNG supply to China. So Qatar signed a deal with Shell to deliver 3 million tons per year of LNG to China from 2025. China's the world's biggest LNG buyer. Shell bets that demand will keep growing as China's industries shift from dirtier coal to gas. I think natural gas is a huge long-term play. Absolutely fantastic in terms of investments in the United States and investments wherever in the world. So Kevin Bambarrel, let's run through this real quick. So he says, does anyone actually believe that a nation can, number one, run trillion-plus-dollar deficits yearly, then multi-trillion when a recession occurs? Number two, use print trillions, subsidize, bail out whatever domestic industries they choose. Number three, run massive 500 plus billion more trade deficits, sending their currencies all over the world, consuming way more of the world's goods than it produces for decades. Number four, then bully nations with tariff threats to keep using their currency and fund their bloated trade deficits, arguing the rest of the world needs them as a consumer. It's truly comical and a plan doomed to fail. The result will be the USD losing reserve status, which has been happening slowly but will soon pick up pace, leading to a massive USA domestic inflation. The reality is that nations like Japan, Korea, much of Africa, and most of Europe have been willing to support the dollar for one reason and one reason only. That reason is the USA status as a superpower with the greatest military in the world. Nations like South Korea played the dollar reserve game for protection from North Korea and China's influence, having battled both Japan and China historically. African nations knew that they need to play the dollar game or risk facing dollars flowing to rebels called freedom fighters to overthrow them. Europe played the dollar reserve game in part as a legacy of the support it got from World War I and II, plus the support it got to maintain status quo in colonized countries around the world. Japan had to play ball post-World War II with its reliance on USA military. For decades, the message has been if you want American on your side militarily, you need to accumulate dollars and also spend them on USA weapons and contract with major USA corporations. Failure to do that means you're going to see your enemies funded. NATO countries accumulated dollars, and that in turn funds the USA military machine. If the USA doesn't step up and strongly with its military, prevent Russia and China from expanding its borders and funding coups, running influence campaigns to get de facto control over weak nations, then the USD is going to lose massive value, more than it's already destined to lose. The threat of tariffs and bullcrap bluster will not save the USD. In fact, it will just accelerate its demise. Also, if the USD is so great, why would it bother with Bitcoin crypto reserves? Question. That is Kevin's opinions about kind of where we're at with the dollar. Brady says, both gold and silver are respecting these parabolic trend lines perfectly. Slingshot parabolic moves in play, 4-year patterns that are stair-stepping up. These are very, very good looking charts. Yes, they are for gold and silver. They're still looking good, guys. Don't get bearish on them. Stay bullish. And that's where we're going to end it, guys. So that's what I've got for today. Thumb up for the content. Subscribe to the channel. Subscribe to the website. And we'll catch you guys later. This is Finding Value.